If you give me just a few minutes, I'll show you a new, clean, sharp momentum tool that reveals exactly how strong each market push really is. It's called the Adaptive Momentum Oscillator by LuxAlgo, and it's honestly one of the smartest ways to read trend strength without delay or noise. This one doesn't just react, it adapts. It shows you when the market's really accelerating and when it's starting to slow down in real time. So stay with me till the end, and I'll walk you through everything step by step, including the setup, settings, and how to trade it using live examples. Let's jump straight into it. Alright, so I'm on TradingView. Let's add the indicator first. Open the Indicators tab from here and type Adaptive Momentum Oscillator. Select the one created by LuxAlgo. Once you add it, you'll see it appear below your chart as a histogram with a smooth line running through it. That's our oscillator. It looks simple, but this little panel packs a lot of information. In plain English, here's what it's doing. The indicator looks inside a window of candles that you choose and finds the biggest price move within that window. It then measures the strength of that move and plots it around a zero line, so you can instantly tell if momentum is positive or negative right now. The histogram shows raw power, and the smooth line on top helps you see the overall trend direction without the lag that most oscillators have. The farther the values stretch from zero, the stronger the move you're dealing with. Now let's break down what you're actually seeing on the chart. When the histogram bars are teal and above zero, that's bullish momentum. When they're red and below zero, that's bearish momentum. And you'll sometimes see thin divergence lines connecting peaks and troughs. Those are built-in divergence alerts. Red lines mean bearish divergence. Teal lines mean bullish divergence. When you see them, it's basically telling you price is moving one way, but momentum isn't following. That's your early heads up for possible reversals. Next, we have the adaptive signal line. That smooth curve running through the histogram. It filters the small fluctuations so you can read the overall bias more clearly. When the signal line stays above zero, the market has bullish pressure. When it stays below, momentum is bearish. Let's fine-tune the settings so we're working with the ideal setup. Double-click the indicator or open its settings from here. Under Inputs, set the data length to 100. This makes it capture a broader view of the trend instead of reacting to every small candle. Keep smoothing length at 9. That's the sweet spot between fast and stable. Turn divergences on and set divergence length to 10, so it scans short but meaningful swings for hidden momentum shifts. Now move to the Style tab. We'll keep everything default for now, since LuxAlgo's color mapping is already clean and easy to read. Click OK. So far, we know how to read it. Now let's talk about how to actually use it to trade. The simplest way is by using it as a momentum bias filter. When both the histogram and the signal line are above zero and the bars are teal, you only look for buys. When they're below zero and red, you only look for sells. That simple rule keeps you on the right side of momentum and stops you from trading against the trend. But we can make it more precise by combining it with one more free indicator.
Do you feel like everyone around you benefits from artificial intelligence, but you have no idea where to start? Don't wait any longer. Start today. Our free trading bot is simple to use, powered by artificial intelligence, and can earn you up to 1% profit every single day. Over 500 members have already joined. Click the link below now to get free access. This is your chance to harness the power of AI and take a step toward a financial boost.
Open Indicators and search for Volatility Momentum Score by Lero RS. It's going to be this one. Add it to your chart. Once added, first of all, open its settings. You can open it from here and go to Style tab. Turn off everything, except the buy and sell labels. Disable averages, disable the plot lines, turn off candle coloring, turn off the score bars. Click OK. Now, the lower panel disappears and you'll just see small buy or sell labels pop up directly on your chart. Here's how we combine them. The Adaptive Momentum Oscillator gives us direction. The Volatility Momentum Score, 5ms, gives us timing. So if the oscillator is above zero and teal, we only take buy labels from VMS. If it's below zero and red, we only take sell labels from VMS. That's it. direction from one tool, timing from the other. Let's walk through how a clean setup looks on the chart. Imagine the oscillator is showing strong bullish momentum, both histogram and signal line above zero. Price then starts to pull back a bit. The histogram dips red for a few candles, maybe 3 to 8 bars, and then snaps back above zero to teal again. That's your reclaim, just like we can see happened in this example. At that exact moment, if a buy label appears from VMS, that's your trigger. Enter the buy trade on the next candle. Place your stop loss just below the recent swing low. Set your take profit at 1.5 times your risk. Let the trade run. You'll see that when the reclaim happens with volume behind it, these setups work beautifully. Now flip it for a sell trade. When the oscillator is below zero and red, you're in a bearish phase. Wait for a small pullback where the histogram briefly turns teal above zero. Again, around 3 to 8 bars. That's exactly what happened over here in this example. Then wait for it to roll back under zero and turn red again. If a sell label appears from VMS right then, that's your sell trade trigger. Enter on the next candle open, stop loss above the last swing high, target 1.5 risk to reward ratio. Let it play out. You'll often notice price accelerates in your favor right after the zero line reclaim, confirming momentum shift. Now, here's a bonus layer for more advanced entries: divergence setups. When you see thin teal lines at the bottom, that's a bullish divergence. At the same time, the price is making lower lows. So in this condition, the oscillator refuses to confirm. So after that, when the indicator prints, next buy label, you can enter a buy trade. So when that happens, take a buy position. For bearish divergence, it's the opposite. So we will look for a thin red line on the peaks. And at the same time, price makes a higher high. As we can see here, but momentum weakens. So when, after this, we get a sell signal, we can open a sell position. Stop below the recent swing low for buys, above the swing high for sells, and again aim for 1.5 times risk. These combinations, zero line bias, VMS timing, and divergence confirmation create a complete structure you can use right away. It's simple but powerful. Always remember, divergences don't mean instant reversals. They just signal weakening momentum. Use them as an extra layer of context, not a standalone trigger. So if you want to use this indicator in your trading, the Adaptive Momentum Oscillator measures pure price thrust. It looks for the single biggest move in your chosen window and adapts the signal line dynamically, giving you real-time strength readings. The histogram shows acceleration. The signal line shows the underlying direction. The zero line keeps your bias clear. Combine it with VMS for precision entries and watch how your trades filter out most of the false signals. That's it for this breakdown. If you found value, leave a like, drop a comment below, and subscribe so you don't miss the next video. Thanks for watching till the end. I'll see you guys in the next video.